Well, this weekend, Moody's downgraded U.S. debt. We take 2 steps forward and then 1 step back when it comes to interest rates this week. Take a look at how that's starting us off. This has happened in the past. S&P had downgraded U.S. debt back in 2011, back when they were printing a whole ton of money. This time around, we're not printing as much money, but we are definitely borrowing more money at the U.S. Treasury level. So let's take a look at the charts this morning. We start today off hovering right at that 450 mark. 4.4988 is about as close as it gets. It's been higher already today, but since backed off after the Moody's announcement over the weekend. So the Moody's rating agency downgraded U.S. debt from AAA down to AA plus. Just a slight downgrade, but nonetheless a negative when it comes to the cost of borrowing money, especially on the long term. And with mortgages, we are always worried about the long term. Looking at right now the 10-year Treasury, you can see that it spiked this morning, making it above where it had peaked this last week, and then fell pretty substantially. Had a great day on Friday. Tried to get back into a lower level below the 100-day average, which we pierced above back at the beginning of last week and have stayed well above it. It looks like we're going to be there for a little while longer. Now, when we take a step back for the last year, we can see that we've seen rates higher and we've seen rates obviously a lot lower, but nowhere near the high point we got in rates back on January the 13th. So a far cry from the worst rates we've seen, but definitely trending in the wrong direction after pretty substantial moves just in the last number of weeks, starting with the tariffs. Where we were gaining a lot of positive ground before the tariff announcements, and then just a lot of up and down. You can see that in the past, not quite as much volatility as far as just the violent up and down that we've seen in the last few months. We did see a longer trend higher at the end of 2024, and that trend continued until the beginning of January. So we'll just keep hanging on tight here and come back with you another update for you in a few weeks. So as we kick off this week, we'll keep an eye on the next round of inflation. Will come out at the end of the month as we prepare for Memorial Day this next Monday. Enjoy your Memorial Day holiday weekend, and we'll talk soon.